You have to corral Zentner when she's not in some trout stream trying to catch trout. What is the Zentner mood now, the Morgan Stanley recession meter? Have we just discarded recession?
So I wouldn't say that we've discarded it wholesale. There's always a risk. As I like to say, bad things happen to good economies all the time, Tom. But, since the beginning of this hiking cycle, we've tried to say a soft landing is the most likely outcome. The economy is not going to go into recession as a base case forecast. And so far, that view has come true. I mean, it was not, I have to say, the most popular view with our clients 3 months ago, 6 months ago, 9 months ago. On the other hand, things haven't slowed down quite as much as we thought it would either. Mike was talking about the GDP data. The downward revision sort of pulls things sort of along the slowing line, but it's still a pretty punchy number. 2.1% is above, I think, most people's estimate of potential growth. So we still have a ways to go. We still think there's more drag from monetary policy in the pipeline. But inflation's coming down. Job growth is slowing. We'll get another print on Friday. Our number is, I think, around 155 for private payrolls. So that'll be another tick lower in terms of job demand. We saw the JOLTS data that had a market reaction as well. So things are cooling off a bit, but they're not cold.
The hallmark of Morgan Stanley economics is invented by Stephen Roach and Richard Berners. Everybody fights like cats and dogs. What is the point of conversation around the desk at Morgan Stanley? What's the thing everybody's arguing about?
Right now, I have to say every corner of the world has its own quirky story. I mean, I think for us in the U.S., there's definitely the slowdown, the soft landing, but boy, the data are surprising to the upside. In very stark contrast, on the other side of the world, I'm always in conversation with my team in Asia. China, we had come into this year pretty bullish on China. The first quarter was super strong, and now things have slowed down a great deal. And so the question is, when do we get enough of a policy response from Beijing to pull things back in? So that's where those are two of the main topics where we're really debating.
Yeah, and we've talked about China a lot in recent weeks because it just seems like piecemeal, one thing after another. They're doing things to try to stimulate that economy. Just to return to your soft landing thesis and the avoidance of a recession, are we really talking about a recession entirely avoided, or one that potentially is just pushed off, just delayed further out into the future as we think about these lagged effects kicking in a way they have not yet fully?
I mean, I think that still remains a key question for us. We still think it is a recession avoided. That's been our view for a long time. The trough, though, in terms of economic growth, does seem like it's got pushed off a little bit. We think things will come down further from here. And there are things besides monetary policy that are a downside risk for the rest of this year. I mean, student loan moratorium, that has gone away. If you look at the Treasury's daily Treasury statement, you can start to see some of those inflows going. So that could weigh things down. On Ellen's team, Sarah Wolf is our consumer specialist, and she's been all over student loan debt repayments as a really key downside risk for the fourth quarter. So are there still risks of a recession? Absolutely, there always are, but we don't think that's the main story, that the labor market slowing but still resilient.